That modern young YouTube philosopher Simon Sinek came out with one of the most watched videos ever saying, "Why do you get up and do what you do?" Well, I am an accountant and I love tax, and that's why I love my budget video every year. This is the 21-22 budget, hot off the press. I'll break it down for you into business, individuals, and a couple of items for super. It'll be quick, it'll be succinct, and it'll get to the point. So, first change starting from 1st of July 2021 is that the company tax rate, which is of course affecting a lot of business, goes from 26% in this current financial year 2021 to next financial year starting 1st of July 21, so the 2022 year, down to 25%. So that's come down over the last few years and down at 25%. Really good news for small business who've either got bucket companies for their company beneficiaries, or potentially they're running a trading company and they're paying 25% tax. Really good for business. The other cracker that they have extended further is temporary full expensing for business. So we're talking 99% of businesses can temporarily full expense. What does that mean? It's as simple as this. Here's an example. You've made $1 million profit in your business in the 2021 year, and you go and spend on a new machine for your business worth $1 million. You could write that straight off your $1 million profit and not pay any tax. 100% depreciation in 1 year. It's called temporary full expensing. So for temporary full expensing, basically anything you buy of capital value from the 6th of October 2020 until the 30th of June 2023, fully installed. What does that mean for you for cash? What it means is if you spend $1,000 today and you can temporarily full expense that amount, the government will give you back 25 to 30% depending on your tax rate. It's not free money, but it's great for cash flow, temporary full expensing. The other one that the government has extended through from the October budget last year to this 21-22 budget is the carry back losses. So you can go back to the 2019 year and you can take that all the way through. So 2019 year, you might have made a profit. And if you make any loss up until 30th of June 2023, you can carry that loss back and offset it against an earlier profit. Bit complicated. Talk to your accountant about that one. So there's a bit in that. The other one that relates to employees of big companies, but it's worth knowing, is if you're involved in an employee share scheme, so you've got some shares in a big company and you leave, previously that would be a taxing point. The government is going to allow you to hold on to those shares for longer, and again, look a little bit more into the budget papers for that and talk to your accountant doing your individual return. So pretty simple for business this time. It's all good news. What about individuals? So the government has extended the LMITO rebate, so similar to another acronym, but it's related to the low and middle income tax offset. So it's extended again for the 2022 year. It means basically that you can get up to $1,080 back on your tax as an individual, or as a couple, $2,160. It's income tested, but again, it's very good for people on lower amounts of income. The last one I wanted to say with individuals, I think, is a beauty when you're dealing with taxation, and that is the government are saying from a residency viewpoint that if you've got feet in Australia for 183 days or more, you'll be treated as a resident. And if you're less than 183 days, you'll need to jump through some other hoops, but they're a little bit more concrete than the previous rules around residency. So the previous rules, complicated. We used to have to work through them, and they were quite grey, so a bit more black and white around residency, and that is for individuals. A few items I wanted to mention about superannuation, and again, they're really, really good for people who are starting, getting greyer and greyer and starting to look a bit further down the track into their 60s, some good news. So from the 1st of July 2022, those people between ages 67 and 74 can continue to make non-concessional contributions to their super. Find out from your accountant what that means, non-concessional, but basically people between 67 and 74 from the 1st of July 2022 can put more money into their superannuation, and that is good for them without following what's called a work test. From the 1st of July 2021, basically your maximum pension balance, or transfer balance they call it, will go from 1.6 million as an individual up to 1.7 million. So that is a good thing too. It's basically a bit of inflation there. The final one I wanted to mention on this exciting budget night is, again, in superannuation, it's called the downsizer contribution. So the downsizer contribution is about if you sell your family home and you've held it for longer than 10 years, your family home, if it's in yours or your partner's name or both, held it longer than 10 years and you sell it, you can put up to $300,000 per person. So if you're a couple, you can put in $600,000 into your superannuation by downsizing to another property. It's a good thing. That's the budget in a nutshell. Get excited, folks. Good tax changes, brilliant for small business, brilliant for startup founders, and some good things in there for individuals and people in superannuation. The budget, we love it. The tax, we love it. So go and enjoy that. Catch you soon.